Okay. Hi, everyone. This is Sasha Hodler. We're on the HodlCast. Today is September 6th, and really excited to have a special guest, Tony Rose. I met Tony through the Wyoming Blockchain Coalition Telegram group, and he's been a huge source of knowledge for me, trying to navigate through using the new regulations that came out there. And maybe, Tony, you could give a little introduction of yourself, how you got into crypto, what your background is.
Sure. Yeah, Sasha. Thank you so much for inviting me to be on your show. It's a pleasure to chat with you today. I guess all crypto podcasts have to start with, so how'd you get into crypto? So my story is very similar. I've heard it, from a lot of people, but just started hearing the buzz, got into it, and then fell down the rabbit hole pretty deeply to the point where it's all I really wanted to focus on. And I was banned from talking about blockchain at family events and that kind of stuff. So definitely very passionate about technology all of my career. And this is just a very exciting time to, be in tech and have something with this much potential come along. I was working at a company called Vantiv when I first really got involved in blockchain. And at that point in time, I was in charge of emerging technology for, Vantiv was a payments company. So we handled credit card payments for some of the largest merchants in the US and some of the largest merchant segments in the US. So everything from Macy's and Home Depot to, small merchant businesses, like we owned 80% of all restaurants, for example. So I was really deep inside of the payments infrastructure in the US, and digital payments is how most of the economy now functions. And most of that happens over credit card rails. And when I started to see how disruptive blockchain technology will be eventually to a massive segment of the economy, it just became super interesting to get more deeply involved. And at Vantiv, I actually was awarded a patent for something I invented that had to do with loyalty points and how you could have an exchange using those points. And I left Vantiv because there wasn't really an appetite at that company to dive much deeper into the tech. So over the past 2 years, I've been fortunate that because I like to play with the technology, I started really getting into playing with the different networks early 2017. And so I was buying a little bit of this and buying a little bit of that and playing with wallets, and then everything just went through the roof. And so I was able to just squirrel away a little bit of money and just self-fund myself, continuing to research and evangelize in the space over the past couple of years. Have been doing various consulting work and a lot of volunteer work really in Wyoming as it relates to lobbying for common sense regulation. And have also done a little bit of that in California.
Mm-hmm. I like how you say that, common sense regulation. I've never heard anyone call it that before, but that's really what it is.
Right. I mean, we can't have just wild, wild west, but when people like myself who have technical competence, it's illegal for me to invest in my friend's startup, that doesn't make any sense. So things like that, where we have securities regulations that are just completely outdated and don't really consider, this new technology. So that's kind of where I come from, the common sense perspective.
Mm-hmm. I like that. And I can identify with the being banned from talking about Bitcoin at family events. Everyone's sick of hearing about it. But it's so weird. Everyone that gets into Bitcoin, that really gets into it, gets like that, or goes through at least a phase of it, and until it settles down. As you're learning everything, it's you can't do much else. It's all encompassing, and it's a funny thing about Bitcoin that everyone I know that's really into it is like that. It's all or nothing.
Yeah, there's definitely a cycle, and I've found that it really takes kind of 6 months at least to really wrap your head around the full potential. And that was at least how long it took for me to go from casual interest to just kind of really deep diving and completely engrossing myself. And then it seems like people go through a phase of, it was really interesting last year when I was really starting to get it, and the whole Bitcoin Cash fork came along, and I was just like so religious about, I'm not going to say which side I was on, but there's so much passion in the space. And, I go back and forth on Bitcoin maximalism, and it's hard to know where things will go. And, just one of the things that, and I'm just kind of bouncing around here a little bit, but, this idea of decentralization, and when you start to think about, what's going to be the most important coin of the future for store value or for payments, or maybe one coin that does both, everyone kind of argues this like, decentralization is like the key. But everything that I've seen in blockchain so far, most networks have a high degree of economic centralization, whether it's, large mining pools or, in distributed proof of stake, people that have large stakes. I still haven't really seen that we're getting away from centralized authority in this, even though people talk about it quite a bit. So that's something that I think I still think about a lot, in terms of the ethos of the space.
Mm-hmm. Well, even just when you look at like whether or not you have to comply with the money transmission laws or various, obviously the securities laws, but it's the whole thing was created to get away from that. And there's still some platforms that you can do transactions anonymously on, but it's becoming harder and harder to do that. Like they're putting people from local Bitcoins in jail, that Bitcoin Maven a couple months ago. And it's really becoming something that's very easy for the government to track, and that's not censorship resistant at all. So yeah, that whole decentralization thing is an interesting topic I'd like to explore more, because I think everyone has a different understanding or idea of what decentralization even means. Like when you look at the government coming out with that decision, or the SEC saying that Ethereum was sufficiently decentralized to no longer be a security, that set off in so many different Telegram groups. I was watching the chats that, everyone was saying Ethereum's not actually decentralized. And so it's just like to me, it seems like it's an abstract concept out there that everyone wants to be or calls themselves decentralized. And if there's any one person behind it, like only Bitcoin is really decentralized because it has an anonymous founder. And if he wasn't anonymous, it might not even be decentralized. Or is it the fact that it lives on all these different nodes that makes it decentralized?
Yeah, I mean, there's so many facets to how the network economics work, and some parts are more centralized than others. I think that most have economic centralization, meaning that a large percentage of the holders of the coins are in a small number of wallets. Mm-hmm. But there's a lot of governance experimentation going on that's fascinating. I think what I realized, because there was the announcement yesterday or the day before that Shapeshift was going to start to require memberships, and that would require going through an onboarding KYC AML procedure. And I was just thinking, in kind of one of the Telegram groups I was in, we were kind of chatting about that. And I thought that an interesting thought experiment would be to compare Augur to Shapeshift, right? Because Augur has launched what truly is a censorship-resistant set of smart contracts that allows anyone to create a marketplace. And they put the onus on the marketplace creator to be compliant with their local regulations, and participants in the market to do that. But the technology itself allows for it to be created with a censorship-resistant way. With Shapeshift, they were they were anonymous. You could participate with it without creating an account. So now they've changed. But I think what's interesting is to look at those two businesses. Why do they make those two decisions? Mm-hmm. And Shapeshift as a business, their revenue model has more to do with transactions, and they probably were coming under a lot of pressure to be compliant or face consequences, whereas Augur is kind of a different model. So I think those are worthy of like compare and contrast in this, as it relates to decentralization. Because I haven't looked at the decentralized exchanges much lately, but things built on 0x, could be replacements for Shapeshift. So I think the community getting all up in arms about Shapeshift. I'm not sure what it says about the maturity of other technology for doing exchanges, but it seems like it should exist. That whether it's IDEX or other exchanges, you can still go and do it without having an account somewhere, and have a peer-to-peer exchange.
And there's still like certain wallets that you can log into and send it back and forth without needing to have an account. But that's just Bitcoin is easy to do it without identifying on a couple different wallets. But yeah, I don't know. I only have like altcoins on exchanges, so I haven't used.
Shame.
Well, I don't have very much of it, but like I don't. Yeah, I shouldn't even be saying that online, probably. But yeah, I'm not like Bitcoin's my main thing that I hold. But so people use the Shapeshift. How exactly what do they do with it? They log in and then they just can send like one coin and they can use it with multiple like Ethereum wallets. Is that?
No, Shapeshift works with a lot of different coins, not just ERC20. So Shapeshift supports, Monero, Zcash, like 50 coins, and even privacy coins, right? So you don't have to log in. You just go to the website. You enter the address you want to receive, the number of coins you want to trade for what other coins. They give you a market price, and you send your coins. A few minutes later, they send the coins that you wanted to trade back to your destination wallet.
Okay, so you can do it between your own coins, or are you working with is there like a counterparty to it?
There's a counterparty. So they do the exchange for you without requiring an account.
Okay, yeah, they like just from my understanding of the money transmission laws, that would definitely fall under transmission. If you're sending any convertible virtual currency is considered a transmission if you're sending it outside of a closed loop. So if it's your own coins, that's one thing. But if Shapeshift is taking any kind of ownership, even if it's through that smart contract, and sending it to a third destination, that's like classic money transmission. So if they're not, reporting big transactions, if they're not filing SARs, if they're not making sure that their users are not on the OFAC list, they're in big violation of what the current regulations around money transmission are. They would need to be registered with FinCEN. They need an AML policy. They have to be providing training to their employees. Like if they're not doing that, the fines and potential criminal sanctions under all the like anti-terrorist acts are in play for them. So they have it's something that it's probably a very good idea that they're doing this, even though it sucks for the community that has to now give up their information, and it would probably really hurt their business because, like you said, people can go elsewhere and find a way to continue doing it anonymously. But
right, it's hard to see how they remain competitive given that other businesses like Binance and Coinbase have such a lead, but they do have a big name brand, and we'll see how that plays out. But this really just demonstrates that where we are in the evolution of this technology, kind of like we were talking about earlier, it takes time to wrap your head around the potential. And just because it's possible doesn't mean it's easy or can happen quickly. And a lot of the things that are possible will take years to develop. And I think it's a big part of the reason why we had the run up last year is a lot of people started to realize, oh, wow, this is going to be revolutionary technology. But the time frames were not understood by most. In my research and just my experience, I kind of see a 5 to 10 year ramp to really, I think we start to see some interesting network effects for some good technology over the next couple of years. But before we get to a point where, people in emerging markets are becoming unbanked because they can take custody of their digital assets, that's 5-10 years out, right? Realistically. But it's something we should move towards. Why did I turn my phone off? But when it comes to things like having decentralized exchanges, right now, where are we? We have 0x. You can do it on Ethereum. There are anonymous decentralized exchanges that have very little liquidity, right? That's the problem. You're on Ethereum. It's slow. It's quote unquote expensive to do any transactions, but the technology's there. We need to have developers working on so many different things in the space. And to solve this particular problem, we're looking at cross-chain atomic swaps and smart contracts, on all the platforms that people want to trade assets. And so you're talking about, we need smart contract technology on Bitcoin and Ethereum that enables cross-chain swaps with smart contracts before we can do Bitcoin to Ethereum swaps, right, in a decentralized fashion. So it's just going to take time, and the market's going to have to demand that functionality is there, and people will have to figure out how to be compensated for developing those tools, because if you become liable for all the stuff you were just talking about by releasing software, if you receive payment, then how does a developer go and do that?
And with the decentralized ones too, it's like there's no one behind it, so there's no incentive to build those unless they can make no one is going to well, I'm sure someone will volunteer to do it, but how do you do it if you're decentralized? You're not taking a cut off every transaction. There's no one foundation or entity behind it to profit from that. So what's the incentive for anyone to make it?
Well, I think that's why Augur is interesting, because you can look at, that was crowdfunded by the community to build something the community wanted. And as far as I understand Augur's business model, they're not making a cut of any of the markets that get stood up. Maybe they are, I don't know. Their lawyers will have to look at that. But you could say, wow, if the community really wanted such and such feature, they could fund developers to create it in such a way that it didn't expose that developer to liability. That developer could get compensated. And we're seeing governance models like this on Dash. So Dash has a governance model where the community can pay for development to happen. EOS has it. Ethereum has a foundation.
Or doesn't Dash have also like something, and EOS too has like an inflation model or some kind of model where a little bit of the staked, when all the staking they're taking one piece of it back to the foundation or something like that's happening. Is that what you mean?
Yeah. So the way Dash does it, as far as I understand, is some of the mining rewards go into a pool, and the master node owners are able to have a vote on submissions that anyone can make. So anyone can make a submission. But that kind of puts the onus on the master nodes, who are kind of analogous to the block producers, to be the ones that have the power to vote for development or whatever the proposal is. EOS has a different model where token holders get to vote. So with EOS, it's a similar way. A portion of the mining reward or a portion of the inflation gets put towards. And this has become very controversial in the EOS community, by the way. It's last week it was a bunch of Medium posts and conversation going on. I'm not quite sure where they are now with it, but last I understood it, 4% of the inflation goes into this pool, and 1% of the inflation goes to the block producers. So it's way more money set into this pool for development, then rewarding the block producers. It's interesting economics, but the problem there is that
then who has access to that money?
It's locked in an EOS smart contract.
Okay.
So, but I think the numbers might be wrong, but I think there's already like over $1 million there, and it's just continuing to grow. And so the way it's supposed to work is it's called the Worker Proposal Fund. And anyone can put in a proposal to have people vote on whether or not that proposal should be funded. And the controversy is that there's a small number of token holders that have a lot of the tokens. And so they would then be able to fund the things that are in their interests and not necessarily in the community's interests. Mm-hmm. So there's a big debate going on about how to kind of resolve this kind of thing. So that, that's what makes this place so fascinating, right?
I know, yeah, there's so much always going on. So would it, like someone like Binance would probably be one of their bigger token holders, so they would have an, way disproportionate say in what happens with that $1 million. Is that what you're kind of saying, or?
Well, not only Binance, because that brings up another nuance, which is the exchanges that are holding people's tokens. I'm more talking about the actual owner, right? So your EOS tokens on Binance are your tokens. So thinking about ownership from that perspective, there's still a small number of wallets that hold the vast majority of the coins. I don't know what the breakdown on EOS is, but Block.one, for example, has close to 10%.
That's what I was wondering, how much they held in reserve. Yeah.
Yeah. So it's that, but you raised another point, which is when it comes to network governance, when people are holding a lot of the coins on the exchange, does the exchange have the right to vote for them? Should the exchange offer proxy voting tools?
I think proxy voting would make the most sense, but even with allowing votes, this is getting dangerously close to crossing securities laws. Like by saying, we have Ethereum being very decentralized due to the SEC. This is still a decentralized nature, but one of the other hallmarks of a securities offering is giving people something like equity, debt, or voting rights. So now if each person holding EOS has the ability to vote, that makes it more akin to a stock or something like that. So that's
that makes sense. But in EOS case, who would the SEC say was the entity that was issuing these securities?
I think who made the money off the ICO, that would be Block One, right? Brock Pierce.
Well, I think they were pretty careful with that. Block One only released code, and if you followed the launch of the EOS network, it was a little bit of a shit show, right? Mm-hmm. Because Block One just released the code, and it was the community completely self-launched the network, which was...
How did they... Sorry. We're supposed to be talking about Wyoming, and actually I have a guy coming... My next podcast is going to be about EOS. He's a developer with it, but this is fascinating, and you seem to have a really good grasp of it too, so I appreciate it. But how did they self-launch?
So Block.one only ever promised to develop the software and release it as open source. And Dan Larimer, as lead developer, has a history of launching highly performant blockchains. So that's why there was a lot of trust in Block.one to be able to release software that worked, or at least it mostly worked. So Block.one released the software, I think it was June or July, beginning of June or beginning of July, I can't remember which. And it just so happened that, so the way it worked was the software is written such that 21 block producers are the ones that sort of randomly create the next block. And anyone in the world could put themselves up to be a block producer that wanted to. And so there was a lot of competition for block producers to get votes of token holders, because you only made the block rewards if you were in the top 100 of the voted in block producers. And it just so happened that
everyone votes on who those 21 are. And is that an ever-changing position, the 21 people?
It is. It
Okay, that's
changes.
really genius then, because it really does make it
Yeah,
so there's no one person to go, or no 21 central people that are constants in it, you know?
right. So you can change your vote I think it's every second. You can change your vote. You can delegate your vote.
Wow. Okay.
Your vote decays. So they're really trying to incentivize like engagement. So your vote decays, I think, like 5% per month or something like that. So you have to like re-vote. Um, and it just so happened that EOS Nation, they're one of the block producers. I'm an ambassador for them, so EOS Nation. But they happened to be renting one of my properties in the Bay Area during this time because they were at the Tulip conference. And so I actually got a front row seat to the launching of the EOS network, and it was really exciting. You know, Block One got a lot of heat over how messy it was, but I don't know that I know of anything that's analogous to how that. I think Bitcoin is similar, maybe Ethereum a little bit, but when you basically just had people around the world that were enthusiasts that decided to stand up pretty beefy IT infrastructure systems to become a block producer, and then the networks, stood up and started running. It's pretty cool. So when so think back to my question to you is, who would you point to as the issuer of the EOS token when you have just volunteers around the world, like creating the network out of software that was just open sourced?
Yeah, it seems like it would be pretty, if there's no one person behind it, then how could, that's what decentralized state is, I guess.
I think the question really kind of is, at what point do the block producers expose themselves to liability? And
But how long do they stay in that role as a block producer?
I mean, it's dynamic. They can be voted in or out at any time.
Mm-hmm. So having it that way makes it like it's not, there's no CEO block producer, it's and the fact that it's voted gives it more. I know there's two factors of voting. Like one, the fact, so if you look at the Howey test, which isn't the only test for something to be a security, but it's one of them if it's an investment contract, which the 33 Act lists like 18 different things: a stock, a bond, forward contract, futures, debt instruments, there's all kinds of things. One of those things is an investment contract, and then it used the Howey test to define what that investment contract is. So in the ICO world, that's the test we've been using all along, and that looks at if there's an investment of money into a common entity with the expectation of profit based on a third party's efforts. So in my mind, you always have to, if you're trying to avoid being classified as that, you have to make sure it is something that's not based on just one third party. No common enterprise where it's like an LLC that's got 5 people in it. That's a common enterprise. It sounds like there's nothing like that there. But if it's not set up properly, so that, say, the company just thinks that there's some kind of decentralized organization and doesn't bother to file as any kind of company, then the law would default that to be a partnership. But here it sounds like it's spread across the world, and there's how many partners would be in it? How many people are involved in this? Like millions or thousands, or how many EOS holders are there, I wonder?
EOS had a controversial ICO model, but it was designed to distribute the tokens into as many hands as possible.
Mm-hmm.
So it went on for a year. Every day they released so many in some sort of auction system. I don't know how many wallets there are. I think I heard they were approaching 1 million, but I could be off. That could be.
It's a lot, though. Like for all of those to be in one partnership, that would be a pretty hard thing for a regulator to go after. And then since it's like that, then the other part of being, you're basing your expectation of profit on a third party's efforts. Well, when you have a system that's got voting involved, so everyone that's in the community can contribute some kind of say in how the project is going to develop, and that should impact their profit expectation. Like they're contributing to their own profit by voting. I think that takes it out of the, based on the efforts of a third party prong a little bit. But then there's also the other issue that voting creates something that is more like akin to a stock, or, we're just, it's a gray world we live in right now. But
yeah. I mean, technology is always I think 2 steps, we're probably 10 steps ahead of regulation at this point.
Yeah. And then when the regulations, what are they going to do around Lightning or these atomic swaps and stuff? I think once all that stuff gets starting to be used, all the KYC and everything like that, they're not going to be able to do it on Lightning Network. So,
right.
Ahead.
I mean, I think Lightning Network is just an attempt to take the payments potential of Bitcoin and blockchain and sort of pigeonhole it into like existing payment paradigms. This Lightning system depends on holders of large amount of funds to sort of mitigate the payment, which is very similar to the way banking system payments work today. So I'm personally not a fan of it. I think there's better ways to scale the technology that keeps decentralization and censorship resistance intact. But there's a lot of vectors of attack on this technology by the old guard that wants to keep the payment ecosystem in place. The recent announcement by Bakkt is pretty interesting. Have you been following Caitlin?
Not as I've seen a little bit about it. So they're a decentralized exchange that just launched, right? Or are they a securities exchange?
No, this is the Wall Street firm. So Bakkt provides the IT technology for exchanges like the New York.
Oh, okay. They're the ones doing the Starbucks stuff.
Right,
okay.
Right. So it was a really weird announcement because it was McDonald's, Starbucks, and Bakkt, and they were talking about creating some sort of Bitcoin exchange.
Mm-hmm.
And so it's interesting to talk about. I know we're not talking about Wyoming, but I think this is actually more relevant right now.
Yeah, that's very interesting. Although I feel like a few times here I'm sounding kind of silly and not knowing what Bakkt is, not knowing how to do shapeshift, but learning's good. So let's keep going.
That's good because I explain it to you and your listeners can get a little lesson too.
Exactly.
So, I would say for a deeper dive on the Bakkt situation is BAKKT. Caitlin Long has an interview she did with Trace Mayer where they really did a deep dive on it, but I'll give a bit of a summary. And by the way, let me warn you about listening to Trace Mayer. I can't watch him too much because I impulsively buy more Bitcoin every time I listen to him speak. He's so convincing about it. He's fun to listen to.
That might be a good thing to watch today.
Right. But so since Bakkt provides exchange technology for existing Wall Street firms, the big concern that Caitlin's been bringing to people's attention is that the way that Wall Street firms work with assets is they do this thing called rehypothecation, which is really a fancy word or just like another nuanced technique of doing fractional reserve type of banking where you're able to lend out more of an asset than what you physically hold. And she's saying that was why we had the crisis in 2008, a big part of it, right? Because when you have more loans and in the way that GAAP accounting works, which is the compliant accounting that companies are supposed to do in the US, it actually allows multiple firms to list an asset or a liability on their books for the same thing. So you have this domino effect that sort of creeps its way through the economy. And what she's arguing is that if they do that with Bitcoin, not only does that remove the whole point of Bitcoin, which is to have hard money, sound money that moves away from this idea that the banks can just print more at will and be bailed out at the cost of our spending power, right? So when they print lots and lots of dollars, the dollars in my bank account go down in value. Like who bared the cost of all that quantitative easing that was done? Consumers, right? Not the banks. They were fine. So, not only is it, in opposition to just why Bitcoin exists, but also she's saying, hey, be careful, Wall Street firms. If you do this with Bitcoin, you can't just make more. There's no one to make more for you if you lend out more than you hold. And not only that, if the network forks, you have additional liability because the network may fork to include strong privacy protections, and that could be something that's not allowed by the regulatory framework. You could imagine government saying, if you want to have privacy preserving transactions, that's not allowed. So what if some Wall Street firm was holding a large amount of Bitcoin 1, the network forked to Bitcoin 2 that had privacy, and everyone wanted the privacy preserving ones, and so the Bitcoins they were holding now are not worth as much. This is actually a big risk that the Wall Street firms need to consider when they're starting to get dip their toes into this. The other interesting thing about the backed announcement with McDonald's and Starbucks is those are both very large multinational corporations. So it sort of hints at the way they're thinking about custodianship of these coins and trying to get their hands on more. And if you can convince holders to spend instead of hold by buying their coffee or buying their Big Mac over the Lightning Network, all of a sudden the firm that's managing the exchange is actually slowly getting custody of private keys by handling the payment. And so they'll be able to accrue over time more and more physical custody of the Bitcoin and then do more of this sort of fractional lending of it, which, as Caitlin and Trace are pointing out, could be dangerous.
Oh, that's fascinating. Yeah, I had no idea about the fractional lending side of it. So you're saying they would take the money from, like, if they're facilitating a Lightning Network payment that will come into Starbucks or McDonald's. Is that the first step of it?
So I think that's where they're hinting at. I mean, that's sort of where my mind goes. It's like, okay, if you're talking about McDonald's and Starbucks with a Bitcoin exchange, with a company that already does massive amount of financial transactions, this is a way to probably think about doing cryptocurrency-based payments with the two of the largest, consumer payment companies in the world, which would then allow them to start taking custody.
Where would the money go? Like, how does Bakkt end up with custody if it's Starbucks that's taking the money in? Wouldn't Starbucks be holding the Bitcoins, or?
Well, Bakkt may just be their bank of Bitcoin. Right, okay. Starbucks doesn't actually have a safe in their basement holding money.
So maybe Bakkt would send them the cash equivalent every day or a couple days or even every transaction, move the fiat worth of that Bitcoin and give it to them on their balance sheet, and then Bakkt would continue holding the Bitcoin themselves, and then they would be lending that to other people as a fractional reserve.
Well, the way banks operate is with fiat, right? The way they are used to operating underneath, since moving away from the gold standard, right? They've been able to operate by lending more than they actually have. Mm-hmm. And that's just their business model. So if they start to accrue more and more amounts of cryptocurrencies, they can try to do the same thing. Mm-hmm.
And crypto lending is something that people have been really, I think, asking for in the market too, for someone that is trustworthy to do that. Like at times, like right now when the prices dipped, if people aren't wanting to sell right now, there's not a lot of options that they can look at to, borrow against their Bitcoin. So this could be a place that really opens that market up too.
Yeah, I haven't really thought about that too much. Possibly. Mm-hmm. Yeah.
I wonder what that kind of volume too. So if it's, if they were sending like actual Bitcoin every time someone was doing a transaction at Starbucks versus compared to them sending a Lightning transaction, how will that affect, will that kind of volume taking place do anything to the price, do you think?
It's hard to say. I mean, imagine that Bakkt is serving as a lightning node for Starbucks and issues, wallets to their customers instead of their, right now Starbucks does a large number of their transactions through their own wallet. It's an app on the phone. So imagine that the Starbucks app is a lightning wallet. And now people are able to load their Bitcoin into it and spend it at Starbucks for discounts or whatever. So then, custody of the Bitcoins would move, from the user's Starbucks wallet into Bakkt as the custodian on behalf of Starbucks. And what Bakkt and Starbucks decides to do with those Bitcoins, I think is a whole separate other matter that is pretty interesting. They could convert it to fiat and move it into their traditional bank accounts. They could use it as a way to hold an asset offshore and not deal with local tax, regimes. It's unknown, but it's fascinating, right? This is just one of the areas of the space that's so interesting to watch and see how it unfolds and, think about, and to, for us talking here to just help other people understand what's going on. And it was funny because this whole conversation with Caitlin and who else is like Antonopoulos and just some of the brightest minds in the space were talking about this last week. It was the hottest thing on my Twitter feed. Meanwhile, the other half of crypto Twitter is talking about like the prophecy being fulfilled. And I don't know if you saw that, but it was just like, oh my God, like the contrast between like the traders and one half of crypto Twitter that's just doesn't seem to, that just seems more about making quick money and memes and pumps and stuff like that. And then there's like the serious side. I was like, it was just like very fascinating to look at that. And half of crypto Twitter is like, bring back alt season. It's like, how about you go out and build a company or join a company or like do something constructive or like you can't just trade and hope alt season comes back. Like there's nothing's going to happen unless people go and build stuff and like move the technology forward. So I thought that was pretty funny last week.
Yeah. I love hearing Andreas talk, and I'll definitely look out for that Caitlin interview. Maybe you could send me the link and I'll actually put it in the YouTube link for this one and post it.
Oh yeah, let me just make a note.
Okay.
Yeah, I'll do that after.
And so can you maybe give us a little background of what your role with the Wyoming, getting all those laws passed a couple months ago now? There were 5 new bills, and I think you played a big part in getting those, moved forward. Can you share a little on that?
Yeah. So my role really was just an evangelist for developers and entrepreneurs. And as these laws were sort of coming through in January, February of 2018, I heard about them because I was participating in a breakfast forum with a group called DATA, the Digital Asset Trade Association. And they're still getting off the ground. But it was, Jill Richmond and a few others, and they mentioned that this was happening in Wyoming. And so we just, as volunteers, flew to Wyoming and started talking to, senators and House of Representatives members, and just encouraging them to move some legislation forward, because what we're observing in this technology space is a lot of companies and a lot of innovation is moving out of the US. And we have really the hubs of this are in Singapore and Zug, Switzerland, Malta's, and a lot of other places that none of them are US based. And so you have, where I've sort of come up in my career is Silicon Valley, and a lot of my bright product people and entrepreneurs were just hitting roadblocks with moving their ideas forward because of the fear of the SEC. And so that was what, as I said, I was able to self-fund my activities most of the year because of last year's run-up. And so I felt compelled to go and participate in helping to move the regulation forward in the US. Wyoming has a really interesting, and I've never really involved in politics before, so the whole thing was a lot of fun and it's just a great learning experience. But Wyoming has a 20-day legislative session, and all of their members are volunteers. And they also have a history of innovation that a lot of people are aware of. They were the first state to.
Is that normal that it's that fast and that there's volunteers, or what would the process be like in another state?
Well, in California, for example, the sessions are 6-8 months. They're all elected officials. There's mountains of money from lobby interests coming in, and things like that. I'm really not an expert on that, but from what I understood, that was it's fairly unusual. And those we helped 5 laws go through in 20 days and get passed by both the House and the Senate, and that just seemed pretty quick to me. Like California, so I've now become a bit more involved in helping people understand how Wyoming did it and what their laws were and explaining it to people. So folks in Colorado tried to do something similar that failed. Yeah, California just passed a bill through the Senate yesterday that made some definitions of what blockchain is, and put together a study group for 2 years. So it's like, okay, Wyoming in 20 days passed 5 bills that created definitions and something of a framework to start thinking about it. And California passed a definition and a 2-year study group. Right, and it took a year.
That's actually, Wyoming's best, but it's good that California, I think they were looking at doing something like the bit license. So a 2-year study is far better than bad law coming into place.
No, absolutely. And I think that it's natural. It's good to have somewhere like Wyoming to test things because, that's how innovation works, right? So I just applaud what they did there. And I think, the Wyoming Blockchain Coalition, Rob Jennings, Caitlin Long, and, David Pope, and, and especially Tyler Lindholm and Ogden Driscoll, who really champion these bills. And they're just, ahead of their time in terms of thinking about, these things. And Wyoming was the first state to pass the right for women to vote, and they invented the LLC. So they do have a history of progressive legislation, even though they're a very conservative Republican state. So
I like they have some good privacy and tax statuses around that LLC.
Yeah, exactly. Yeah, the privacy, people aren't really aware of it, but in Wyoming, your company really has ways to maintain your privacy and protect your assets.
But the tough thing about these, it was really exciting watching it all unfold, but I've been hesitant. My client at first, like in January, February, I was getting a ton of people wanting to do ICOs, and that has slowed down considerably. But even if there were that demand out there, I don't know that. I think I would register them as a utility token in Wyoming, but it would be more just for fun kind of thing. Nothing against. I think it's a great law, but you can have Wyoming residents invest that are not accredited investors, but the rest of the country, unless they could somehow take e-residency in Wyoming, we have to deal with the federal laws, and there's no utility token definition by the SEC, so it makes it kind of tough to use that law that was passed.
Yeah, maybe it's not a mistake that Wyoming has, I think, one of the least populous states in the country. So a good place to practice it. No, you're right. And look, Wyoming got a lot of flack in the industry because the utility token bill was not useful from a practical perspective, but it was useful in terms of moving the conversation forward and getting people to start thinking about what is common sense in this space. So I think that's what needs to be applauded and focused on. But I'm not aware of any company that was able to use the Wyoming utility token as a fundraising mechanism, because it's still against the SEC securities rules, and the SEC is much stronger in terms of, I think they are the ones you need to be afraid of, not.
Not that, well, the states, that Operation Crypto Sweep, there's 200 enforcement actions coming from, a variety of different states in the U.S. and the Canadian provinces, but none from Wyoming that I'm aware of. But people, you can't use the Wyoming utility unless you actually register it as a utility with the state as well. But where I see it could be useful is if you were doing it a Regulation D sale. So you're complying with all the securities laws by limiting it to accredited investors. Except in Wyoming, you could take a Wyoming resident's investment without requiring them to be accredited. Maybe, but then you're saying it's a security for the SEC's purposes, but it's something else in the state of Wyoming. Maybe you need a separate line of tokens to sell to the Wyoming residents or something like that. But if there were more states that had that, like say there were 5 states that you could offer a utility token to, it might make an incentive for companies to create one security token for the Regulation D investors that they have to lock up for a year, and then one utility token that they could use right away and offer that to sale to people in Wyoming and, A, B, C, D states that also passed similar legislation to Wyoming. But until more people come on board, it makes it hard to do. Unless someone was a local company, then they could do it. It's, just depends what the Wyoming investment appetite is in crypto.
Right. Yeah, no, I think all of these complications in the regulatory side of things have really hampered the growth of the potential of the tech. I think we'll still get there, but just thinking about, what is a utility token? What are they supposed to be used for? And, some people argue, there's no such thing. But I think, back to EOS, I think that's just a good example of how they've been able to really thread the needle in terms of having a token launch and having a network stand up, regardless of how you feel about EOS, because there's a lot of strong feelings for and against it. This is a token that broad distribution and has enabled it to launch. And because now only accredited investors can get a hold of tokens, no one else can do what EOS did, right? Because how do you launch a network like EOS, or how do you take the ideas of how EOS launched and innovate on top of that, or continue to iterate that concept when only people that can buy your tokens are accredited? They got to be locked up for a year, and then after a year they can only be bought by other accredited investors. Right, the whole reason something like EOS exists is because
the Reg D tokens right now don't have a home to go to after they are
right.
They can't go on Binance or Bittrex. So
yeah, so it's a shame. I think it's shameful. We'll see what happens. I don't see a way forward now, but there's so many other areas to innovate on that launching more networks, while it would be interesting. That's just not what the industry should do. Focus its energies on right now. There's a lot of people waiting for dApps. It's like, is CryptoKitties the killer app? Come on, guys, let's come up with something. What's next?
Yeah. I think it's funny to watch how much innovation is driven by price, or how the price drop seems to have dried up a lot of innovation. That just from, I don't know any stats on that, but it seems like it looked to me like there were a lot more people saying they were building stuff while the price was increasing last fall compared to right now. But the ones that are building now are building higher quality projects maybe, or they're in it for the long run.
Yeah, I mean, there's, like we spoke about before the podcast, any startup, the percentage of failure is at least 80%, if not more, in any space, whether you're talking restaurants or .com startups or whatever. So with all the ICOs that went on, it's going to be the same thing. The ICO season was about I don't know. I think Augur was one of the first ones, and Civic, and then there was like a bunch of them, right? But it takes time to build products and launch products, especially this new tech. And so we're starting to see a couple of them launch now. And sort of my theory, the way I'm thinking about it is, the money's drying up. So if there's a lot of skills you needed to have to make it this point and still have some of your ICO money left, if you left it all in ETH, you're screwed now, right? Because you're getting taxed on what you raised last year, and now it's not worth as much. So there's just all kinds of treasury management stuff that people needed to be on top of. But point I'm making is we're already starting to see some of these projects launch. EOS launched, Augur launched. I don't know what's going on with Civic. They keep making noise. One of the other ones I'm really super, super, super excited about is Sovereign. It's SOVRIN, and they should be launching soon. This is identity technology, and it addresses GDPR and things like that. So it's a decentralized identity solution built by people that have been thinking about internet and identity for 20 plus years. And then blockchain came along, and they're like, oh my God, this is like exactly what we need. So it's kind of the opposite. A lot of the blockchain startups are, we love blockchain. Let's go find something to build on blockchain. And this is an example of, we're trying to solve a very hard identity problem on the internet. Blockchain has evolved to the point that it actually is a viable solution. So domain experts applying their domain to blockchain. In any case, they should be launching pretty soon, and they've already been announcing a lot of really, really great partnerships with people like Visa, MasterCard, large banks, governments that realize, and everyone realizes, that the architecture for identity on the internet is completely broken. You have all these big honeypots. There's all these data breaches. Your social security number can be bought for, a couple bucks probably, along with, all the information someone would need to fill out a credit, report for you. So it's just completely broken. And this is, one of the best potential solutions for that problem that I've seen. And, so that, we'll be launching soon. So
what are the point I'm making is like that some kind of digital ID card, or how are they going to solve it?
It's the way it works. You sort of think about the assets, your digital assets, like a Bitcoin or your Bitcoin. Your identity is in a similar thing, right? Like each bit about you is an asset, and it can be custodied by you, right? So you can custody your identity information just like you custody your Bitcoin, and then the network allows you to selectively share it, or selectively share collections of your identity information, like whatever the party needs to authenticate you. So if you're walking into a bar, they just need to know that you're above a certain age. That's it. If you're applying for a car loan, they just need to know things specific to that. So it's a whole architecture around how to decentralize the custody of identity assets and to create a marketplace for the exchange of those. It's just fascinating. I definitely check it out. It's SOVRIN. They're also part of the Hyperledger Foundation, so they're within that family of Linux Foundation, Hyperledger projects. Under the code base is called Indy on Hyperledger. But the point I was making was that they're launching this year, so a lot of interesting things are launching this year, and these are going to be new networks like Bitcoin, like Ethereum, and they're going to take a year or two to get any kind of network effect. So I kind of think we'll start to see more hype building in like a year or two. And
it'll be nice to have things like that you can point to that are solving real human problems, if they're able to actually do that. We have yet to see that really happening. But if they are, then it's easy to get good regulation because we can have a good use case. Whereas right now, even Augur launching, like it's, another thing that the government looks at and it says, oh, this is a little strange. It's not, maybe not above board with, the betting on whether people will die or not. but something like putting identity documents, that can have a real, that's like, it sounds like something that regulators would look at and see in a positive light. So it could help us get more good regulators.
Yeah, absolutely. And when you look at,
that's where Caitlin was, that's what I admired so much about her, because she was able to kind of, and you too, like you both, very professional demeanor, able to go in and talk the regulators' language, with the whole heart of, all the ideology of Bitcoin behind it, but bringing the positive lights, for the positive things about Bitcoin forward to them, in a way that they're going to see as an advantage, rather than, Bitcoin gets such a stigma for being, a way to deceive the government, or, get around paying your taxes or buying drugs on the internet or something like that. A lot of people think that's the only uses for it. And so far, maybe that has been some of the more prominent uses for it. So.
Yeah, I mean, what's fascinating about Bitcoin is you look at the daily volume on it. I think it was approaching PayPal volume recently. So.
Oh wow, that's awesome.
Yeah, so it's more than, who knows, but to your point, exactly, the industry. That's why I have like a 5-year horizon on it reaching any kind of potential. We need to see consumer apps on EOS launch that actually people use. We need to see things like Augur be used, like for positive things. And just on the Augur point, there was a really good interview of Joey Krug, who's the founder of Augur, on Laura Chin's Unchained podcast.
Okay.
Last week. So definitely listen to it, because he goes into a lot of detail about the use cases, and it's fascinating to hear him talk about it, and why he did it, and sort of where he's coming from, and the potential of it. It's a great it's a very interesting thing, podcast to listen to. So I'll send you a link to that one also.
Okay, cool.
But yeah, so again, the point is the ecosystem needs to develop real life apps and use cases that show people what we're all so excited about before I think we'll see another hype phase.
All right. Well, how can people find you if they want to connect with you on social media? Or
I'm at Tony Rose 023 on Twitter, on LinkedIn, Tony Rose, and Tony-Rose on LinkedIn, and Tony at airways.io if you want to email me.
Nice. Yeah. Okay. And any closing things you want to discuss, or?
No, that was a lot of fun. I think we just covered a lot of really great current events. We should do this again in a couple months.
Yeah, I would love to. Yeah, this has been, I learned a lot from you. I always enjoyed talking to you. From the very first time we had, a conference call about one of the Wyoming things, it was you're a huge source of knowledge, and I really appreciate everything you've done for the space. And yeah, thanks, Tony.
Thank you so much, Sasha. Bye.
All right, have a good one. Bye.